Mitch, I'm anticipating we're going to have a fun conversation with this one today. And I was thinking about this because honestly, I like lists. I think as people, we like lists, right? We want to know
Yep.
how things kind of fit into the realm. And I like this one really because we're going to talk about mistakes that loan officers make, right? Mortgage loan officers in particular.
Correct.
Because, Mitch, I'm fond of you. I appreciate all your wisdom and guidance. And that's why you're a regular guest here on my Facebook Live. Um, Absolutely, without a doubt, not every loan officer is created equal. There's some big differences between loan originators and their skills. And sometimes it makes the difference of getting to the closing table or not.
Correct.
Sometimes, we can always do an extension. I hear that often, right? Well, we can always extend. And that drives me nuts. I hate that cavalier attitude when it comes to the contract because the seller or buyer, they don't have to do anything, right? They can absolutely hold to the contract. And I've seen that position where maybe it's cost somebody their earnest money because somebody wasn't on top of the ball, right? So, so we're going to talk about 10 mistakes, 10 common mistakes. This isn't like the top 10, right? It's just 10 that you found pretty frequently that loan officers make mistakes around. So one, if you're a loan officer watching this, take note, right? Because Mitch has been doing it a long time, does it really well. If you're somebody looking to purchase or refinance, right? One, going to Mitch is a good source. Two, these are things that might want to like trigger a question for your loan officer. So
Correct. Yeah, there's a lot to know. And one of the things that comes to mind in our industry, like the real estate side of the industry, is a lot of this you only learn by doing and making the mistakes in the past. And then you add that to your list of I'll never do this again. And some of them you just don't know if you're not involved in that kind of a transaction. So doing many loans as I have in the thousands over the years, these things change and adjust. But some of these are very commonly missed items, and I thought they came to the forefront of my mind pretty quickly. So it'll be fun to go through them and talk about ways to avoid having both realtor and lender involved together and making sure these things do get handled up front and communicating that back to our buyer clients, because ultimately many of these things come and start from them. So it's our job to ask the right questions.
And whenever I'm looking to make a mortgage purchase or refinance or whatever, I'm consistently going down the route of how do we underwrite this up front? How do we get it to such the stance that I'm not going to have any surprises down the road? Because as a self-employed real estate agent with multiple sources of income, sometimes that's very difficult to provide, right? So if I can give Mitch everything he needs to be able to say, Matt's good to go, right? The underwriter's seen it, reviewed it. That's sure going to make life easier. So, let's make life easier as we go further on the transaction and not harder.
For sure. And that's why people like you and I get hired. And our job really is to foresee the future. And that future is if the buyer answers a question or provides documentation in a certain way, I know based on experience what that could then turn into on the next piece of paperwork that I'm going to need, or the next question to ask to make sure I get the proper information to have not only the goal that we start out with, but also to have a plan B and plan C in place just in case something does shift. Having a backup is very important to make sure the transaction still closes. So to your point, yes, being prepared is very important.
I like to consider myself a optimistic. It's not the pessimistic. I'm skeptical, right? I'm an optimistic skeptic, and I'm always thinking, okay, this is probably going to work out. It's going to be fine. How many different ways can this go sideways, and how do we account for that?
Correct. Right? And that's how we have to think when we're planning our attack on our loan transactions or real estate transactions. Yeah. And we don't indicate that and share that in that format typically, but what we say is if we can't get what we think we can get, what else can we get to provide what we think the underwriter is going to want to see?
Yeah,
So
yeah.
yeah, that's why we get hired. And I think that's the value both you and I add. And that is, and it's such an intangible because people say, what are your interest rates and what are your closing costs, or what's your commission that you charge to take a listing or a sale? And those are all really important. But really the ultimate goal is to get to closing in a systematic way that's not a lot of extra work and a lot of extra stress for people, thinking that was a really seamless transaction when in fact there was a lot of moving parts that they just weren't aware of. And if we can do that, then I feel like we've done our clients the best service possible.
It was interesting last year, or maybe it was the year before, since COVID started, it's all a blur. Had some clients at the closing table thank me, and they had sold multiple homes in the past. I said, this was the smoothest real estate transaction we've ever done. And I was like, wow, this was one of the more bumpy ones that I've had to be part of. And I'm
Right.
glad, right, that we were able to create that environment to be super
Right.
smooth on that end. Because it should be as a consumer. I don't want you to have the bumpy ride. So
No, exactly. And that becomes a relative thing. You and I have had more challenging or less challenging, and we do many per month, where a home buyer or seller does this once every 5 to 10 years or 20 years.
yeah.
So they only remember that last experience.
Yeah. And it's always changing. So let's jump into
Sounds great.
Mitch's list of 10 common mistakes that mortgage officers make. You've got your list, and I'm going to let you go through. You were nice enough to share it ahead of time, so I can go back and make reference. So let's talk about number 1 on your list.
Sure. Well, first thing is money. Money is really important when it comes to buying a house. From our perspective, where those funds are coming from is probably the most important piece, because people these days want to have a lot of cash at home. And if someone says, I've got $10,000 cash that I want to use to purchase my home, and I'm going to or already have put that in my bank account, then we have to validate, where did you get $10,000 from all of a sudden? And that causes quite a bit of concern in our industry, because we can't validate that that was their money. And so cash on hand or big cash deposits do become of concern. And so we want to ask, when someone says, I have $15,000 to work with to buy a home or more, my next question is that money you currently have in your bank account or an investment account someplace? Or is that going to be gift funds from a family member? Where is that money going to be coming from? Or are you waiting to get it, but that's what your total will be? So a lot of people right now are waiting for income tax returns. And they'll say, I have $10,000. And I'll say, great, how much do you currently have and where is it coming from? And they'll say, well, actually $5,000 is coming in my tax return and $5,000 is in the bank right now. And you and I spoke just before we started today about how long is the IRS taking to provide people with their returns. And that's another conversation from a standpoint of timeliness and supplying your information to the IRS in a certain way. But we don't really know how long it's going to take right now, because everything is taking longer. So to rely on that to buy a house could be of concern, especially if you're under contract and you have a 30-day closing. So me knowing what that is important. And there's a good example of plan B or plan C. So plan B is, if they don't get their money in time, where are they going to get their money from? And that's where I would ask the question, if you needed gift funds, can you get gift funds? Or do you have a 401k to pull money from, or what have you? So great example again for B and C.
Well, cash isn't cash, right? Necessarily when it comes to this, not all cash is equal.
That is very true.
We've got to source it, and it's got to sit in that account long enough.
Correct, and that's probably one of the biggest things that we find are the bumps in the road along the way, is the either expectation of receipt of funds or the type of funds and how long they've been sitting in someone's account. So big one, we have to address it every time. We have to get very detailed, which is why it's number 1 on my list.
Yeah, where the money comes from matters
Yes.
for probably a multitude of reasons. One that jumps to my head is just money laundering, right? We got to make sure we know where the money's coming from. When I say we, it's not really me, right? I'm not an investigator. I'm not investigating anybody's money laundering habits, but the government sure wants to know.
Well, they do. So it reminds me of the movie where there was show me the money. Show me the money and where it came from. that's the lender caveat.
Yeah. Where did it come from? So
exactly.
So yeah, sourcing and finding out where the funds are early in the transaction, because at some point it comes up when the underwriters,
Right.
right? These are all things we want to make sure get addressed early on in the process.
This is even before you go out, show property, or go into contract, for sure,
Mm-hmm.
because it could be the item that causes the transaction not to close.
Yeah.
And we definitely don't want to set it up that way.
Yeah,
So,
without a doubt. So let's move on to number two, right?
yep.
So number two on your list.
Yeah, I was sitting at closing several months ago, and we do have a kind of a set email that says, at time of closing, here's how you can provide your funds to the title company, who ultimately is in receipt of funds for the buyer, the seller, the lender, the realtors, everybody involved. And the way money goes to a title company will either be a wire, which again, wire fraud and all that's another conversation, or two, a cashier's check, depending on the amount of the cashier's check, and if the title company will allow for a cashier's check to come as their form of closing numbers. And I was there, and both realtor and I were there having a conversation like this, and the buyer said, the title company said, so can you show me your cashier's check? I didn't see a wire come in. And they said, I have my personal checkbook. I was just waiting to write my check here today. And both realtor and I looked at each other and said, we both sent an email out, and I guess we should have picked up the phone. Yeah. And so thank goodness they banked at a large bank that was across the street. Coincidentally, they closed, they went and got their cashier's check, came back, and it closed fine 15 minutes later. But it was a really good reminder of things that we assume people know, they don't know, and we need to make sure we either put it in writing and express it verbally 1 or 2 or 3 days prior to the closing, or sooner, of course, to make sure that that money does arrive in the proper manner so that they can close on their closing date.
So the title company doesn't like personal checks, and they also don't take cash.
They do not like cash either. They will take typically a cashier's check for less than $500. If something comes up last minute, they will do that.
Yeah.
So that's every now and then we need that. So
little bit different if we're dealing with a $200 check versus
yes,
$200,000
exactly. Yeah. So so that one we said never again. We got to figure out a different form of communication.
Yeah.
So
yeah, right. We've got our communication procedures in process to make sure that happens as well. So number three, and this is interesting because I was looking for a client who owns land, and where this land was, there was a dramatic difference in values based on kind of the acreage and what I was seeing. One of the factors was this next thing on your list, finding out if the property's in a flood zone.
Right. Really important. That changes the nature of when the perspective of the buyer desires sometimes to buy a property that's in a flood zone, should they have not known that in advance. It should be known in advance. Usually it's in the listing, but not always. So we run a flood certificate request immediately. Usually we get it back same day. And then that would then roll into now having to get flood insurance. And if a buyer didn't know the property was in a flood zone, they could have a very large monthly expense on flood insurance, in addition to their traditional homeowners insurance. The good news is there's been more affordable flood insurance available over the last several years with private insurance companies instead of going to FEMA. FEMA is probably at least 3 times more expensive than doing it with a private insurance company. And we use the gentleman you and I know, from Altitude Insurance, David Fair. He provides that private insurance, and I've used him every time we have a flood property just for the client to get a quote. But finding that out later in the game just makes the buyer think, gosh, am I buying the right property? So the sooner we can at least share that information, if it wasn't done up front, then it's the right thing to do is to notify him immediately. So that's important. And we interpret the property a little differently as well.
Yeah, for sure. And that's going to impact approvals as we look at insurance. One of the things that's factored into that payment. Yeah.
Correct. And it could cause someone not to qualify, or it could cause them not to feel comfortable with affordability.
Yeah.
So very important.
All things we got to find out earlier on in the process as opposed to later. Now that we can't do that before we find the property necessarily. I mean, we can pull up the map and say, right, these are the homes not in a flood zone, which
Right.
is a majority of properties, right? This is still something that comes up.
Correct.
Um,
Correct.
cool.
Yep.
So number 4 on your list, and this is interesting for small business owners.
Mm-hmm. Yeah, really important piece. So initial conversations I have with clients for what we call becoming pre-approved. One of the questions is, what kind of work do you do? How long have you been doing that work? And are you an employee or self-employed? And oftentimes people who are self-employed have something, corporations called S corporations, which are sole proprietors. They own it by themselves. It's just a different tax filing, a tax advantageous filing. And they become employees of that company. So if they consider themselves an employee, they receive W-2s each year, they get a pay stub each month or every 2 weeks like an employee would, but they're truly actually the owner of the company as well. So if we ask, are you an employee of a company? They say yes, we get W-2s and pay stubs and we're good to go until such time we find out that they're in fact the owner of the company, which now makes them self-employed, which then change the nature of how we interpret their income. Mostly, this will be a very detailed piece of it, but mostly it's about the most recent year of income taxes that have been received and income earned. But now they have to fall in the category of self-employment, which requires personal tax returns, corporation tax returns, business bank statements, et cetera, that we wouldn't have gotten if they were truly an employee of a company. So asking the question, are you an employee or are you an employee of your own company? That's the second piece to that question.
Yeah, that the income and how that's done matters. Now, for those that are watching, understand that there's a difference between what the lender is talking about or considers and what the government and the IRS might, right? They might look at things differently from a tax standpoint. Let's not confuse the two by saying there needs to be consistent.
Correct. So again, another question that gets asked up front, and we just work within the parameters that we have to work with. Sometimes we say to a client, I see you received your W-2 for 2021. Have you filed your actual S Corp or business tax return yet? And if they say no, then we actually can't use that income until they file those tax returns. So we may then say, if your returns are done, go ahead and file it, then we can use that income for qualifying.
Yeah, and again, back to an earlier comment, right? Let's electronically file for our tax returns.
Yes, electronically filing.
Speed up that process.
It will speed up the process. And that actually ties into number 9 on the list. I think we'll bring that up too. And that is if somebody does file taxes and they have if they owe money to the IRS and they choose to pay it on a monthly basis over a certain amount of time versus a cash payment right at the time of filing, that becomes a monthly bill that we have to qualify somebody from a standpoint of a home loan. And so the question has to be asked, do you owe any back IRS tax payments and are you making any monthly payments? Because some people owe it and haven't made any payment arrangements. It will come up. We will find it, unfortunately. We will find it. And it'll say, by the way, you owe $12,000 from 2021 or 2020. What's the status with that payment? So that's another one that pops up, sometimes too late in the game, and then could cause inability to qualify because we have to include that payment. So that's important.
It's interesting as a listing agent, when I'm having a conversation with a lender and things like this have come up, my question is always, why didn't we find this out earlier on in the process, right? Why didn't we find? Well, we just didn't know about, well, Mitch, right? What you're telling me, it's their job to know.
It's our job to know. It's also, I'm going to say, it's the job of our buyer to share what they know as well. And every now and then there's a time when neither of us knew or they forgot. And there's something that came up from the past, which is one of the other ones towards the bottom that I've run up against recently. So I thought I'd throw it in there. So it's a combination of everybody asking the right questions and providing the right information is in a timely manner. And the goal is to have all that done before you go under contract.
Yeah,
for sure.
Yep. Yeah. Sometimes to that point, you don't know. Brenna may not want me to share this story here about things you don't know. Brenna's driver's license was suspended for not paying a speeding ticket for 3 years um,
Ah,
before she found out. Interesting
got it.
story we could get into another time when we've got Brent on. But yeah,
Yes.
sometimes we just don't know things.
Yes. And you know, you bring up a good point I didn't put on the list, and that is expired driver's licenses. That is one of the things that we get a driver's license up front in every transaction. And then we not only do we get it, we have to look at it to make sure it's not expired. Because it won't be valid at a closing as valid ID, and then you have to go to your passport. And that could be expired because most people don't look at that in many cases. So looking at expiration dates and driver's license is crucial. And we, like I said, we get those up front.
Yeah, I think my driver's license expires next year, but it's not one of those things that I'm looking at on a regular basis.
No, most people don't until it's too late. So
yeah.
Yep.
Well, I do remember when I was waiting tables, right? I had to have a valid ID if you were ordering alcohol. So, Mitch,
Right.
if you sat in my section, I ask for your ID. It says clearly you're old enough, but your ID's expired. That doesn't count as a valid ID.
Does not count, which, yep,
Yeah.
for
So
sure.
had some folks upset at me. Thank God I'm out of the restaurant industry. So let's jump to number 5 there. You know, we went from
Yes.
4 to 9. We'll get back to number 5 around appraisals. So it's
Yeah,
not
so
just one standard appraisal.
no, there's actually several different kinds of appraisals that are required based on the loan type or the property type. And so if somebody is buying a home and using, for example, in their VA entitlement, we would need a VA home loan ordered. If they're using a conventional loan, which is a typical Fannie Mae or Freddie Mac loan, which are the most commonly used, we would need to use that type of an appraisal. If the property is a home versus a condominium versus a townhome, those are 3 different types of appraisals. And sometimes the confusion comes in where you might have a townhome, but it's actually legally a condominium. And so you have a townhome style condominium. And if we don't know that up front, we as the lending side will order the appraisal as a townhome. And in fact, it should have been a condominium. So it can get cleared and fixed and revised, but that's after the appraisal comes back in and the appraiser says, by the way, this is actually a condo. It is not a townhome. Or you asked them to do a townhome, but it's actually a condo. So that just causes some delays. You know, we don't want to have delays. We want to make sure they're using condo comparables versus townhome comparables if it's really a condo. And so it's really important to do that. The other part of that is if someone's buying it as a rental property, as an investment property, there's a requirement to get a rental survey for that kind of appraisal. And that is where the appraiser does it kind of an analysis like an appraisal is on rents for homes that are similar to the subject property that the client is wanting to buy as a rental property. So they'll provide us with how much rent they might get, as well as what's called an operating and expense report, which is, well, if you own this home, your utilities and maintenance might be about this much money. And here's how much you might end up with each month after these general expenses. If you don't order that as if for a client who's buying a home as a rental, you'll have a delay because you'll have to go get it. So if you forget to do that, that's important.
Yeah, delays make everybody nervous. So we want to avoid delays.
Correct, without a doubt. Yep.
All right. So ordering income tax transcripts, number 6.
Yeah. So the nemesis of everybody's existence in the mortgage business, IRS. Anytime those 3 letters come up, that is always like, you know, you start sweating and you're like, oh my God, what did I do? Am I getting an audit? And actually, we got a letter in the mail. My wife and I, she says, honey, I got this letter from the IRS. When you get home, please open it. I'm afraid to open it. Hope we're not getting an audit. So I get home and I, of course, have the exact same feelings. And I open it up and it says, we paid you $15 in interest last year. Please file that on your next year's tax return. So I'm like, when did I get $15 from the IRS? When did I ever pay you anything? So
yeah,
don't know where that came from. But anyway, that's everybody's first thought.
Just direct deposit it into your account. You never saw it, right?
Must have been. So it was very, thank goodness that's all it was.
Yeah.
But these transcripts, what they are, it is a different format of when a buyer files their income tax returns. We're able to pull those tax return numbers that we use to match up with the tax return that we receive from the buyer, in this case, the borrower. So we have to confirm that what they provided us is actually what the IRS received, because an underwriter is using that information to underwrite the file and approve their income and expenses, et cetera. So we don't have to get that for every client, but it's for self-employed people and people who are fully on retirement income. So those are the ones we have to get for sure. And if they don't match up, usually there's a reason why, but it's something that we have to get. Right now, IRS is taking about 2 weeks to get those out. And we use a service. It's not a direct to the IRS. There's a service that then goes to the IRS to request these. And 2 weeks is too long right now for our industry because closings are taking place very quickly. So the buyer can go and create their own IRS portal within the IRS website and get them in 10 minutes, 15 minutes. So we're actually have people take care of that way now up front when we know we're going to require those tax transcripts. We will still order them also just as a backup, but it's important that we get those up front. That has caused many delays in closing for sure. We haven't had any personally, that's me knocking on wood, but I've heard of them. The questions I get phone calls. Hey Mitch, we can't close because we don't have transcripts with another company. Does your company require the same thing? And the answer is we do, depending on the income that's being used. So.
Well, and Mitch, I know that you've done this in the past. You will pick up the phone, talk to a loan officer on a different deal and help walk them through and solve it. So
definitely. Yep.
That matters.
Yeah. And, it matters to the buyer. And ultimately, that's who we want to make sure is being taken care of, whether it's my clients or another lender's client. Our industry needs as many kudos as we can get. So I feel like if I can help a transaction close just based on some experience I have, I'm all in. And that's a good thing. It's a way to pay back to the industry. That's a great industry for all of us.
Yeah. So. But the smarter we all get, the easier this becomes on everybody, right? Everybody's got the same goal. Let's help people buy and sell the real estate. And,
correct.
Try to take all the complexities and make it simple for them and easy. So
exactly.
All right. So number 7, let's talk about mistakes that loan officers make here with number 7.
All right. Lucky number 7, income and commission income. Kind of speaks to you and I, because that's how we make our livelihood. So there are a lot of people who have income that is not just base salary. Some have commission, some have bonus, some have, they're called RSUs. They're restrictive stock units that they get for working for many of the high-tech companies, get paid that way. And that is income that we have to make sure is usable. So when we're interviewing a buyer and reviewing their income sources, if I say to them, could you please share with me what your annual income is or monthly gross income? And they say it's $12,000 a month or $120,000 a year. I ask them if they can please break that down, if there's any kind of overtime bonuses, commissions, RSUs, if I know they're working for a high-tech company that get paid that way. And oftentimes it's, well, my base salary is 80, and I get X amount of dollars for bonus as long as we meet our numbers. And then every now and then I get a commission from something. So we really have to break down the detail of what the income really is created from so that we're using the right numbers. And the last thing I want to do is use somebody's bonus income if they just started receiving it in 2022. It's not enough history of receiving it to actually qualify using that income. So those variables are crucial in asking the right questions.
The lender is going to look at bonus income a little bit different, or commission income versus a salary hourly
right.
type income, right? So knowing how that breaks down matters. So.
Yeah. Let me just add, if I can add quickly to that, when we're using down payment assistance programs, if it's income that we can't use to qualify, that's a positive thing, because then we don't have to include it in this maximum income a first-time homebuyer can use on those programs, because the income limit is about $83,900 that someone can earn and qualify using one of the down payment assistance programs for a conventional loan, Fannie Mae and Freddie Mac. And if they say, well, my base salary is 70, but I make 15,000 in bonus, and I've only received bonus 1 year or the last 6 months, that total is 85,000. They make more than the requirement, But since it's not usable income, I could back that off, and now they satisfy the income limit. So it works both ways. It could be better for higher income. It could be better actually for lower income in some cases.
That's awesome. I think we could do a whole episode around that.
Yes.
Understanding, hey, just because your number might be above it, it doesn't mean that we can't take advantage of the programs that are there specifically designed for
correct.
folks.
Yeah. Again, it's interpreting the information accurately to give the buyer all the different options that they can use to finance a property.
Yeah. Because the reality of somebody who makes $80,000 in income a year and 85, and the difference in their income and their financial, probably not very much, right? Let's let them both take advantage of it if we can.
Right.
Right.
That's correct. Yep. And that again, that's my job. Know all the programs and the ins and outs and how to interpret the information.
Yeah. All right. So number 8, student loans.
Yeah. Yeah. A lot of conversation these days around student loans because they've been deferred, number one, and people haven't had to make payments on them for quite some time now. And they actually sometimes forgot they even had student loans because they haven't made payments. So there's those forgetting items. So there's very defined ways that we have to determine how much a minimum monthly payment is for someone on a student loan, even though they're not making any payments. So my question to someone is, do you have any student loans? No, I don't. Well, so then my second question is, do you have any student loans that you are in deferment and not making any payments, but you still have them outstanding? Oh yeah, I do. I just didn't remember because I don't have to make payments. That's a big answer. Those are two completely different answers for the exact same question. So we have to dig a little deeper because of the circumstances with COVID. Number one. Number two is, and why I brought this up is I had someone buying a home, and we do these reports on the back end that says, does a buyer have any federally owned payments that have not been paid and they went into what's called a judgment status? So it's basically they owed it, never paid it, and it just never got resolved. If somebody wants to get a government-backed loan, FHA or VA, and they have an outstanding student loan in a judgment, then they are not allowed to get another government loan until that student loan has been resolved. And resolve could be setting up monthly payments and having a history of making payments or paying it in full. So wasn't shared with me at time of my pre-approval. It didn't show up anywhere until this report got run. And when it got run, memory was recalled by our client who said, you know what, I do, and I know about it, but I didn't know that it was important in this case. And we weren't able, they couldn't pay it, and there wasn't enough time to make payment plans, so we could not complete that transaction. So, of course, now what do I ask? Do you have any student loans that you know you haven't paid on that may have gone to judgment status? As another question around student loans. That's an important one. And that one will just creep up without anybody knowing about it.
Right. If I'm not making payments on it, it's something that's out of mind completely.
Right. And it was 12 years ago when it took place. So I get that it wasn't remembered. So
a lot happens over 12 years.
Without a doubt it does.
All right. So we did number 9. Let's jump ahead now to number 10. If the borrower is making any, and I'm going to add another question in here to that. Okay. Does this also impact if you're receiving child support alimony?
Yes. So the line is if a borrower is making monthly payments for alimony or child support, the important information to get around that is that we have to include it as a monthly debt from a qualifying standpoint. So sometimes people forget because it's an automatic withdrawal out of their paychecks. Mm-hmm. And if I haven't seen a pay stub yet, I wouldn't have seen that yet, which is something we look for in all of our paychecks that we receive. But if it's gone through the registry, it's just it's just deducted every time. I don't think about it. And actually I forgot to mention it. I get that because they just forgot. It was an automatic thing. So that's important to ask that question. The other question around that is, and how much longer will you be required to make those payments? Because if there's less than a certain amount of time frame, it's typically 10 months. If there's less than 10 months remaining on those payments, then we do not have to include that in qualifying for a client. So there is some very fine defined timeframes that are important to also ask a follow-up question if they are making it. Your comment is, what if you're receiving alimony or child support? There's also defined guidelines around that. So as long as we can show 6 months of receipt of the child support or alimony, and it's going to continue for a minimum of 3 years from the day or the month you do your closing of the transaction, we can then use that for qualifying as actual dollar for dollar income. So that's the other way of using it. We asked both questions, but this was the one that actually causes people not to qualify by accident, unknowingly.
Yeah, understanding where some of that is at. So making those payments and for how much longer.
Correct. And I'll if I'm talking to, let's say, two people that are co-borrowing together, you may go, oh, they're first-time buyers, they're not married, they probably don't have alimony or child support. I still ask that question because they could. There's no reason. They just aren't married now to each other, but they may have been married previously. So you just never know, and that's why that question gets answered or it gets asked all the time.
Well, they may both have kids they're paying child support to, right?
Yeah, of course.
I'm a father, right? I've been now for about 2.5 years, but I started a little bit later. I've got friends that started much earlier. They've got kids graduating high school, right? So young couple, it still may be a thing, right? Something that I could see where a more green mortgage officer may not think to even ask that question.
Right. And so, again, this is the list of 10. There could probably be 30 more of these somewhere if I really thought really hard and long about it. But these are the ones that I tend to see come up, and you would just kind of scratch your head and go, God, I'm glad I asked that question. Because if I didn't, something could have changed the outcome of this transaction.
Yeah, so. I think easily 30. And I think if we were doing this in real estate agents, the top mistakes real estate agents make, I think that list would be a whole lot longer than 30.
Yes, maybe so. But that, again, that all comes in time and doing a lot of transactions. And the more you do, the more you kind of get caught every now and then, like, ooh, I forgot about that one, or I'm glad that came up now and we discussed it and we have a plan B should we need it. Yeah. And my only other comment around all this is the beauty of where I work and my team is I do have a team to go back to. So if I get an answer I'm not familiar with, or I'm not quite sure how our industry will allow us to either get someone for a monthly bill or use income in a different format, I just call my underwriter and say, here's my scenario. What do you think the best result will be that we can use? And then I answer that question right away, and we're good to go. I'm not having to wait for answers and then call people back and get them pretty quick. But that's really important.
Yeah, it's interesting. I had a conversation yesterday with a real estate agent who has somebody else that they know that's competing for the same client, and that other agent has been in the business about 2 years and decided to open up his own brokerage, which you can do after 2 years, as long as you meet certain criteria. Now, there's not a lot of criteria to get there, right, to open up your own brokerage, but now it's a one-man shop that's got no oversight. He's got nobody else to go to for questions. And the conversation I was having with the agent in my office, like, what a great opportunity you have, because look at all the resources at your fingertips. And I know who our office attorney is. I don't know how much, like, how good of an attorney a one-man shop could hire when they don't do a lot of transactions. The value of being able to go to somebody and ask specific questions. Hey, I haven't seen this before. This is a little unique. How do I not harm the client, right? Let's get this done and make sure that it's done well with one of the largest financial transactions they may make. Gosh, what a powerful message there in itself.
Right, exactly. And we have the same way. I'm not a mortgage broker. We're a direct lender. So we have these resources to pull from on our team. It's a phone call, it's an email, it's a text, whatever we need to do. And it's all in taking care of our clientele. And if we've made a mistake, we come back and say, hey, I thought the rule is this. We found out it's this. Here's our other option we can work with. Can we make this work on your end? And, we're all human beings. Things happen. This list of 10, it happens. It happens probably every day, somewhere along the way with somebody. The goal is to try and foresee those, like we talked about earlier in the conversation, and kind of predict the future with the answers that I receive when I ask my questions in the initial pre-approval process. So yeah, it's fun. It's like putting a jigsaw puzzle together. So it's kind of fun.
As we look at these things, it comes from experience. It comes from care, right? You have to care about the outcome and care about it being a smooth transaction. Otherwise, you'll just throw it up against the wall. And hey, sometimes it happens, sometimes it doesn't. We just get through it, and that's never the attitude that Mitch has taken. So it's no wonder why he's prepped and getting these things ahead of time, so that it's just a smooth transaction. And one of the few mortgage officers I know that at least was prior to COVID attending closings. With as smooth as your transactions go, I could see how you have no problem sitting at closing saying hi to everybody because everything was super smooth. Other mortgage officers are like, "Hey, the deal's done. I'm moving on. I don't want to see those folks face to face."
Yeah, no, I want to be there, and I'm back again now. So it's been really fun to be able to show up and shake hands, hug, see people have tears in their eyes with their first-time buyers, and go, "I never thought we could do this. This is wonderful. You guys all helped us get here." So it's fun to be back in action with the personal final touch at the closing.
Yeah, absolutely. Well, the battery on my light went out. I think that was time, right? We nailed it perfectly. My light saying, "Hey, it's time to wrap up." Mitch, again, thank you. Right, this was a fun one to do, and I think we can add another list. Maybe it's 5, maybe it's 10, but another list of common mistakes so that people can avoid some of those pitfalls there in a future episode.
Right, I agree, and I look forward to that. And thanks for inviting me again. It's been another fun journey for the last 40 minutes. It's always nice to think through the things we do every day and say, we do good things for our clients, and it is a lot of work and a lot of effort and a lot of responsibility we take on. But you and I are up to the task, and our clients appreciate it, and we look forward to doing many more down into the future.
Yeah, for sure. Excellent. Without a doubt. Well, again, thank you, Mitch. And for those watching, let us know what questions you have for future episodes.
Yep. Thank you.
All right. We'll see you, Mitch.
Take care. Bye, Matt.